Family time has become even more important for 34-year-old Edwin Gan after he was diagnosed with an aggressive brain tumor 2 years ago. He's gone through surgery, radiotherapy, and chemotherapy to recover from the disease. But the day he got the cancer diagnosis remains vivid.
Shock. My jaw just dropped. My wife was in the 3rd trimester. How can this happen to me? I have no family history, I don't drink, I don't smoke. So the first thought that came to my mind is what will happen if I pass on? What will happen to my daughter? What will happen to my wife?
A hospitalization plan that his parents bought when he was a child paid for Edwin's hospital bill. That was over 300,000 Singapore dollars. Lump sum payouts of $350,000 from 2 critical illness insurance plans covered his mortgage installments, daily expenses, and his newborn daughter's needs while he was unable to work for a year. But the battle to regain his health isn't over.
I would say roughly about 70 to 75% recovered. There's roughly about 10% of the tumor left inside. Everything is stable for now, but we have to go through a quarterly monitoring phase. So it's perpetual one.
According to a recent survey by Manulife, cancer is the physical illness that worries Singapore respondents the most. Prior to his diagnosis, Edwin was a sports enthusiast training to compete in Muay Thai. He was also advancing his career as a financial consultant. The cancer was a big blow, but it made him realize the importance of having enough financial buffer for long-term care.
The first few months I was just lying on the bed. Yeah, because the treatment made me very weak and I couldn't really move and I just want to sleep. Yeah. So in terms of mobility-wise, it affected me a lot. I couldn't do a lot of daily things.
In Singapore, CareShield Life is a government-led insurance scheme that protects against severe disability. It offers support for people who are unable to perform a set of basic daily activities.
When we talk about long-term care costs, there's significant amount of financial burden. But CareShield Life, fortunately, will be able to defray at least 30% of the total cost. But how to make up for the rest? If you are risk averse, you can buy a supplementary insurance scheme so that you will be able to top up the cash payout.
CareShield Life can be upgraded for higher monthly payouts, which can help in paying daily expenses, hiring a caregiver, staying in a nursing home, or buying medical aids.
It's never too early to plan for long-term care because events can happen unexpectedly. I think the main thing that I would consider is whether the cash payout is inflation indexed, right? Given the rising healthcare costs and living costs. Another thing is the trigger factor. As of now, CareShield Life only pay out $600 when one becomes severely disabled. Yeah, I would like to see a staggered payout, probably like maybe $200 when you are mildly disabled and maybe more when you become severely disabled.
For Edwin, CareShield Life is a safety net, but he regrets not topping up with cash so that he can get a higher payout.
So there's a cap in terms of the amount of MediSave you can use to purchase CareShield. It's $600 per year. So what I did was I used the $600 to just upgrade as per whatever the $600 can give me, which is $1,400. So if you ask me now, what I would add as a criteria, right, is to use the cash. Use cash to upgrade and use cash to top up. Actually, it's worth to top up to get more coverage.
Currently, Edwin spends around $4,000 every quarter for checkups and medication. This could go higher if his medical condition changes, but he can't buy more insurance.
So the thing is, because now I'm unfortunately uninsurable, I couldn't buy any more insurance. So what I could do for myself currently is to make sure that I continue to pay for my hospitalization premium, to make sure that if anything happens to me, if I were to get admitted to hospital again, to go through another round of treatment again, at least the main majority of the bill is being covered. Then in terms of my own recovery process, I have to be a bit more prudent because the thing is I have the payout. So I have to be more prudent in terms of my spending. I have to make sure that I can self-insure myself through investment, through savings. Yeah, but most importantly is to make sure that I be very wise with my money.
As a financial consultant, Edwin's advice to his own clients is to always plan for the worst.
If you want a plan, right, plan based on if you are unhealthy. Yeah, plan based on you are unhealthy and how much money you need, and then on top of that, add a 30% buffer. So you plan based on that. Generally, that should land you in a comfortable spot.
Although financial planning shielded him from the worst of his hospital bills, he still wishes he did some things differently when he was younger.
If I knew what I knew today, if I knew that I'm gonna get it today, I would definitely maximize whatever I can get when I was younger. It's like you don't buy insurance with money, you know? You buy insurance with your health and your youth. Yeah. And the thing is, a lot of people, they always think that, oh, I got money, I don't need. But the thing is, if like me like now, I got money, I want to buy insurance, but I cannot buy because I got no health.